Joining us now on all of this in a speech she just gave before the Atlantic Council in a CNBC exclusive, IMF Managing Director Kristalina Georgieva. It's great to see you, Managing Director. Thank you.
Great to see you, Sarah. Thank you.
So as far as global growth, just a snapshot of where we are right now, it sounds like you guys think that things are looking up from where we were a few months ago. How does it look?
It looks better than it did then. Marginally better, but better nonetheless. And there are two drivers. One is a strong U.S. economy. Two, some of the emerging markets that are surprising us on the upside. The good news also is inflation is going down, but it is not yet where we want it to be.
That's just what I wanted to ask you about. Inflation coming down, especially in the United States. How do you view the path from here? Because it was looking really good until this year, when now we've had 3 hot reports in a row.
Well, we need to continue to follow the data. And the data would tell the Fed when it's time to act. We have been steady on. It was early when many were enthusiastically talking about cut in March, 7 cuts this year. And of course, what we are hoping for is that the Fed would make the right choice, act if and when circumstances allow it.
What does that mean? Because I think what the discussion is, should they make an adjustment from 5.5%, which is historically pretty high and restrictive policy, just to get in front of any weakness in the economy, or should they wait for more evidence that these high rates are really hurting the economy and slowing down inflation more?
I mean, look, the Fed is going to be watchful, and it's not going to be in a hurry. But let's be more optimistic around the future, because the U.S. is not affected by what is happening in some other economies, pressure for increase of labor costs. This is mostly due to the fact that the labor supply in the U.S. has been quite strong. And also the U.S. Government is in a position to play a somewhat bigger role in making sure the economy doesn't overheat. From where I sit, the fact that the U.S. economy is strong is good news for the U.S., good news for the world economy. But if interest rates were to be prolonged at a high level much more than we initially anticipated, that can create risks for financial stability for the rest of the world. Why? Because high interest rates, all other things equal, are throwing cold water on economic activity. And two, because high interest rates mean the United States is very attractive for financial flows. The dollar is strong. Flip side, other currencies are depreciated. So I can tell you that you're watching it, we're watching it, and we remain on our projection that we would see by the end of the year the Fed being in a position to take some action in a direction of bringing interest rates down. But again, don't hurry until the data tells you you can do it.